What if I told you that everything you think you know about building a stock portfolio is unnecessarily complicated? What if you could replace dozens of individual stocks, multiple ETFs, and hours of research with just one single investment? And what if this one investment had already delivered over 14% returns this year alone? Stay with me, because by the end of this video, you're going to discover the ultimate set-it-and-forget-it investment that could change how you think about wealth building forever. Let's be honest, if you're like most investors, you're drowning in choices. Should you buy growth stocks or value stocks? Large caps or small caps? Technology or healthcare? Energy or financials? And once you finally decide, how do you know when to rebalance, when to sell, when to buy more? It's exhausting. You're constantly second-guessing yourself, wondering if you're missing out on the next Amazon or Apple, losing sleep over whether your portfolio is properly diversified. This is what I call the investor's dilemma, and it's keeping millions of people from actually building the wealth they deserve. But here's the beautiful truth that the financial industry doesn't want you to know. There's a better way, a simpler way, a way that requires zero stock picking, zero market timing, and zero portfolio management headaches. Quick favor, hit like and subscribe right now so YouTube shows this to more people who need to see it. Enter the Vanguard Total Stock Market ETF, ticker symbol VTI. This isn't just another investment product. This is the closest thing to a perfect investment vehicle that exists in the market today. Think about the philosophy for a moment. Instead of trying to pick the winning stocks or the winning sectors, why not just own everything? Why not own the entire U.S. stock market in one simple purchase? VTI has been doing exactly that since May 24, 2001. That's over 24 years of proven performance through the dot-com crash, the financial crisis, the pandemic, and every market swing in between. And here's what makes it extraordinary. When you buy one share of VTI, you're not buying one company. You're not buying 10 companies. You're buying 3,532 companies, every single one that matters in the U.S. stock market. Now let's talk about the numbers that should make you sit up and pay attention. VTI currently manages $547.65 billion in assets, nearly $500 billion. This makes it one of the largest ETFs on the planet, which means when you want to buy or sell, there's always someone on the other side of that trade. The liquidity is institutional grade, whether you're investing $100 or $100 million. The current price sits at $328.90 per share as of October 22, 2025. This makes it accessible for virtually any investor. You don't need to be wealthy to start building wealth. But here's where it gets really interesting. The expense ratio. Are you ready for this? 0.03%. Let me say that again. 0.03%. Do you know what that means? It means for every $10,000 you invest, you're paying just $3 per year in fees. Compare that to actively managed funds charging 1% or more, and you're keeping an extra $97 for every $10,000 invested. Over decades with compound interest, that difference is absolutely massive. So what exactly are you buying when you purchase VTI? Let's go under the hood. Your top 10 holdings read like a who's who of American corporate dominance. Number 1 is NVIDIA at 6.5% of the portfolio. That's right, the AI powerhouse that's been dominating headlines. Then you've got Microsoft at 6.06%, Apple at 5.58%, Amazon at 3.52%, Meta Platforms at 2.58%, Broadcom, both classes of Alphabet stock, Tesla, and Berkshire Hathaway rounding out the top 10. Combined, these giants represent about 38% of your portfolio. But here's what's fascinating. While these mega-cap technology companies dominate, you're also getting exposure to 3,500 other companies, small, innovative startups that just went public, mid-sized companies in their growth phase, established blue-chip industrials, regional banks, energy companies, healthcare innovators, real estate firms, everything. Let's break down the sector allocation because this is where you really see the diversification at work. Information technology leads the way at 32.6%, which makes sense given that tech drives the modern American economy. Financials come in at 13.8%. Consumer discretionary at 10.5%. Industrials at 9.7%. communication services at 9.5%, healthcare at 9.4%. Then you've got consumer staples, energy, real estate, utilities, and materials rounding out the portfolio. Every single major sector of the economy is represented according to its actual market weight. From a geographic standpoint, VTI is laser-focused on America. 99.51% of your holdings are U.S. companies. There's minimal international exposure, which makes this the perfect core holding if you believe in the long-term strength and innovation capacity of the American economy. Now, let's talk about what really matters to you as an investor: performance. Because you can have all the diversification in the world, but if it doesn't make you money, what's the point? So here are the verified numbers, and they're spectacular. In 2025 alone, VTI is up 14.34% year-to-date based on net asset value, and over 15% when you include reinvested dividends. This isn't speculation. This isn't backtesting. This is actual real-world performance happening right now. But let's zoom out because 1 year doesn't tell the whole story. Over the past year, you're looking at returns between 16 and 17%. Not bad, right? But it gets better. The 5-year annualized return is 15.71%. Think about that. If you invested $10,000 5 years ago and achieved that return, you'd have over $20,000 today. The 10-year annualized return is 14.7%, and since the fund's inception back in 2001, the annualized return is 9.78%. Let me put that in perspective. If you had invested $10,000 when VTI launched in 2001 and just held it without adding another penny, you'd have over $60,000 today. But here's the thing. Most people don't just invest once. They invest regularly. If you had been adding just $200 per month over that same period, you'd be sitting on a portfolio worth well over $200,000. That's the power of consistent investing in a low-cost total market fund. Now, some of you might be thinking, but what about income? I want dividends. Don't worry, VTI has you covered there too. The current dividend yield is 1.11% based on the 30-day SEC yield. Now, I know what you're thinking. 1% doesn't sound like much, but here's what matters: reliability and growth. VTI pays dividends every single quarter like clockwork: March, June, September, and December. The annual dividend amount is $3.75 per share over the trailing 12 months. The most recent dividend was 90 cents and 7 cents per share, paid out on October 1st, 2025, to shareholders of record as of September 27th. But here's what's really impressive: the dividend growth track record. Over the past year, dividend growth was 0.99%. Not huge, but remember, we're in a low inflation environment. Over 5 years, dividend growth has been 5.98% annually. And over 10 years, it's been 7.75% per year. This is the kind of steady, reliable income growth that can fund your retirement or accelerate your wealth building when you reinvest those dividends. So now you're probably asking yourself, why is this the forever ETF? Why not something more exciting? Why not a pure tech fund or an AI fund or whatever's hot next year? Let me give you 6 compelling reasons why VTI deserves to be your buy and hold forever investment. First, ultimate simplification. You eliminate every single portfolio construction decision. No more wondering if you should overweight this sector or underweight that one. No more trying to time when to rotate from growth to value. No more rebalancing spreadsheets. One fund, one decision. Done. Second, unmatched diversification. With 3,532 holdings, you have diversification that would be literally impossible to replicate on your own. When one company stumbles, you've got thousands of others picking up the slack. When one sector underperforms, other sectors compensate. You're protected from individual stock risk, sector risk, and even size risk because you own large, mid, and small cap stocks all together. Third, cost efficiency that's almost unfair. That 0.03% expense ratio means you keep 99.97% of your returns. Every single year, for decades. The math is simple. Lower costs equal higher returns. Over a 30-year investing career, the difference between a 0.03% expense ratio and a 1% expense ratio could literally be hundreds of thousands of dollars in your pocket instead of someone else's. Fourth, proven long-term performance. That 14.7% annualized return over the past decade isn't lucky. It's not a fluke. It's the natural result of owning American businesses as they grow, innovate, and create value. You're betting on the collective ingenuity and productivity of the entire U.S. economy. Historically, that's been one of the best bets you can make. Fifth, tax efficiency. Because VTI is passively managed and simply tracks an index, it doesn't generate the constant capital gains distributions that actively managed funds do. This means if you're holding VTI in a taxable account, you're keeping more of your money and paying less to the IRS. Your returns compound faster when taxes aren't constantly taking a bite. Sixth, liquidity that matches the biggest stocks in the world. With nearly $550 billion in assets and millions of shares trading every single day, you can buy or sell VTI instantly at fair prices. The bid-ask spreads are tiny. You're never trapped. You're never struggling to find a buyer. It trades as smoothly as Apple or Microsoft stock. And here's what's happening right now in October 2025 that makes this even more compelling. The fund continues to demonstrate strength in a dynamic market environment. Technology sector leadership isn't slowing down, which is why NVIDIA now holds the #1 position in the fund. Major institutional investors, the smart money, are increasing their VTI allocations. Mather Group and other sophisticated investment firms have been adding tens of thousands of shares to their portfolios this year. When the institutions are buying, that tells you something. But I need to give you a reality check because I'm not here to sell you a fairy tale. VTI is not a get-rich-quick scheme. If you're looking to double your money in 6 months, this isn't your vehicle. VTI is not immune to market volatility. When the market drops, VTI drops. In 2022, it was down over 19%. In 2008, it fell more than 37%. These downturns are part of investing, and they will happen again. The question is, can you stay the course? Also understand that VTI is not international exposure. With 99% US allocation, you're not getting emerging markets, you're not getting Europe, you're not getting Asia. If you want that exposure, you'll need to add an international fund. And finally, VTI is definitely not for traders. If you're someone who gets bored and needs excitement, if you need to check your portfolio daily and tinker with positions, VTI will drive you crazy because the whole point is to do nothing. Buy it and forget it exists for decades. So what's the bottom line here? The Vanguard Total Stock Market ETF represents the ultimate intersection of simplicity, performance, and cost efficiency. For the vast majority of investors, it is genuinely all you need for your equity exposure. You're getting 3,532 companies, every sector of the economy, exposure to large, mid, and small cap stocks, proven long-term returns, reliable quarterly dividends, and all of this for just $3 per year on every $10,000 invested. This is why VTI truly deserves the title of Buy and Hold Forever ETF. It's not flashy. It won't make you sound smart at cocktail parties when you talk about your latest stock pick, but it will quietly, consistently, reliably build wealth over time. And isn't that actually what we're all trying to do? If you found this analysis valuable, do me a favor and hit that like button. Subscribe to the channel if you want more straightforward investing insights without the hype and nonsense. And drop a comment below answering this question. Would you trust a one-ETF portfolio, or do you think you need more? I'm genuinely curious about your perspective, and if you know someone who's paralyzed by investment choices or wasting money on high-fee funds, share this video with them. Sometimes the best investment advice is also the simplest. This video is for educational and informational purposes only. Investment performance shown is based on historical data and projections. Past performance doesn't guarantee future results. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Thanks for watching.